I'm Matthew Green, and I help lead the M&A and Strategic Venture Capital Department for Western and Southern Financial Group. Why is FinTech better suited than traditional financial services to accelerate financial inclusion across the country and around the world? David, let's go ahead and start with you.
I think there are a couple of things. I think first, the fintechs that are gaining financing, that are starting to hit some of their growth strides, are able to be a lot more flexible and responsive to whatever the customer, the end customer need is. For example, when back in the day, a couple of years ago, when commercial banks were slowing a lot of their lending, the onslaught of things like Cabbage and OnDeck and some of these other lenders came and sort of filled that gap in a way that was much more flexible, able to be stood up much quicker, able to leverage data in their decisioning. And so it really helped accelerate the business while a lot of the traditional lenders were pulling back. On the consumer side, there's a ton of opportunities where things like gig workers just don't have a really good suite of financial products that have been tailor-made for them. And it's not necessarily in traditional finance's business or best interest to create those products at the onset. And so fintechs and startups have been able to come in and innovate really quickly on the margins in a way that is accelerating the ability to serve these customers better than what the traditional infrastructure can necessarily sustain.
Yeah, I totally agree with that. I would definitely say from a fintech's perspective, we're able to kind of look at the pain points that users normally have that traditional banks aren't necessarily able to tackle right on. So for instance, for underbanked individuals, it might be difficult for them to stay within the banking realm or to find or get credit worthiness approval from traditional banks because they don't fall in line with the normal traditional standards of finding someone, credit worthy in order to get a credit card or a first car loan or whatever that might look like for them. I think that's the best part of fintech is that we're able to look at those pain points and kind of find and fine tune those into unique scenarios in order for those individuals to win.
I think there are a couple of other things here. You think about large financials, any company in any industry, but you think about large financial institutions, they have lots of infrastructure, decades and decades of infrastructure. They have policies that aren't so much consistent with, where the market is going. And they have a culture that is still sort of inward facing. And so I think with fintechs, they recognize that there's an opportunity here, not only to solve those pain points, and they're doing that effectively, but they can be more nimble, as David pointed out, and they can capture, they're purpose-built to solve a specific problem, whereas large financial institutions are trying to solve all kinds of problems at the same time. I think the other piece of it is right now, the incumbent banks, the incumbent financial institutions, they're so busy trying to compete for market share in their existing customer segments that they're missing out on the opportunities that I think these fintechs are recognizing. Large institutions, the large investment banks, national banks are competing for high net worth and ultra high net worth wallet share, and retail banks are trying to compete for the mass affluent, market share, and they're forgetting about this sort of new emerging customer segment that's entering the market, and they're just busy trying to compete with each other. I think therein lies an opportunity for entrepreneurs who are creating new fintechs.